I want to ask you, I know you concentrate throughout the entire meeting, but I want to ask that you concentrate with me for the next 15 minutes, because what I think I'm going to share with you will be a game changer and is often the way our consumer is thinking today. Do you ever realize that when one area of the economy is down, we have a tendency to think that the entire economy is down? So we might think that unemployment is higher, meaning more people are unemployed, and therefore the real estate market must be lower as a result of it. Or maybe we think the stock market surely has dropped, so therefore the real estate market has dropped accordingly. But you realize that now there's not one market, there are multiple economies. In some sense, you may have a dent on the front fender, but it doesn't mean that your rear quarter panel is damaged. And I would argue that maybe the economy has a dent on a couple of fenders, but the real estate market really represents that 8-cylinder V8 engine. Like, that's the engine of our economy. And you know that as you meet with homeowners, the real estate market is a big part of their wealth. The real estate market is a big part of their retirement. Often I think we're not in the business of selling homes, we're really in the business of selling retirement packages, because that's how people retire, by owning real estate. And so what the consumer often sees is one dent on the fender means the whole car is damaged. Today I want to walk you through some different stats that I think that will help articulate that message to you. And then we'll take this and share this with our clients so that they can know the truth about the real estate market and be educated accordingly. Now, let me share my screen with you. And of course, as a real estate team, you know this, that we look through these market stats every week. We're just going to take a little different viewpoint. I want to start with this is from Macro Trends, and what I'm looking at here is the U.S. national unemployment rate. This is one of the dents in the fender. And if you look, and I've gone back, I think, 5 years, if you look at this, you could see that the unemployment rate is just humming along, and all of a sudden, what happens? Shoots up through the roof. Yes? Like, we have seen that unemployment. Are you seeing my screen? Nod your head yes if you're seeing my screen. And we've seen the unemployment rate really jump here significantly. And from what's averaging in the 3s and 4s now to 14, and we're seeing some recovery in the unemployment rate. And we would think that because that's happening with unemployment, it must happen in the real estate market. Let's take a look here at this is the stock market. This represents the Dow Jones Industrial Average. This is also from Macro Trends. This is your Dow Jones Industrial Average. I went back 10 years on this one. And most people, they saw that the market dropped, and the stock market certainly did drop. And we dropped from what was humming around, 26 to 27, even to 28, almost to 30,000. And that fender got a pretty big dent when it came to the Dow Jones Industrial Average, dropping to 18,591. And of course, it was all over the news media. And so you would now say, okay, wow, that's another fender that is really damaged on this vehicle. Since then, we have seen really a substantial recovery. Not quite back to what it once was, but we've seen a significant recovery. And most people, when they were reading about it, they kind of think that we're still here with the market crashing. And we look at this and then we say, well, then what's happening to the real estate market? Let me take you through simply a few cities that we're watching very, very closely. And if you're watching this video after the fact, you might say, why did you focus on those cities? They're what I call macro markets. And what happens in those cities tend to happen in the neighboring cities. What happens in Concord tends to represent what's happening in Clayton and Pleasant Hill and even Martinez. They're such a large city that they're very influential in the neighborhood markets. So let's kind of I want you to keep this picture in your mind. And this is probably what so many that are not in the real estate industry or business are thinking about. They think maybe the real estate market has responded accordingly. And let's go to one of those cities. And I'm going to start in Sacramento this time. And this represents Sacramento and what's occurring in the market. And in 2010, the average home value was $142,520. And this, by the way, I'm going to take it all the way to June of 2020. And notice it does not look like this chart. Notice that Sacramento has actually continued to climb in home value to the point where when we go right to June of 2020 in Sacramento, the average home value is at $310,000. The average home sales to list price ratio, they're actually selling for more than what the list price or the sticker price of the property. And we actually have less inventory with only 2 months inventory. And this picture here in Sacramento represents a very different picture than what you see with the stock market or even the unemployment rate. Let's take a look at another city. This represents our Elk Grove. We're looking at the June 2020. And if you notice that we're going back to 2010, and in 2010, the average home value, or median rather, not average, but median, which is the price in the middle, was $230,000 with a price per square foot of $113. And now we look at what it is today, going all the way to June of 2020. Values have risen to $402,500. Today, on average, again, in the city of Elk Grove, properties are selling slightly more than what they're listed for. And the average day on market is 7 days on market. Absolute game changer. Let's look at three more cities, and then we'll kind of open up for any questions you might have in the chat box if you have any at all. Let me just go right now to that chat box so that I can monitor that. Okay, so let's look at the city of Antioch. Now we're moving westbound, and I'll continue this westbound journey. We're now back in the city of Antioch. Back in 2010, the average home value, median home value was $210,000. Average days on market was about 16.5 days. And you can see what's happened over time in the city of Antioch. And values, month after month, year after year, continue to climb to the point where we're at in June of 2020, $422,500 is your median home value in the city of Antioch. Price per square foot is averaging $223 per square foot. And our average day on market is 10 days. With our sales price to list price ratio, and look at this at 103%, there is 1.6 months of inventory. In other words, if not another home came on the market or not another for sale sign went into a neighborhood yard, in 1.6 months, there would not be a single home for sale. And that's how strong our real estate market is. In stark contrast to what we saw with the Dow Jones Industrial Average, in stark contrast of what we're seeing with the rapid changes in the unemployment rate. Let's look at two more. We're going to Concord now, traveling westbound on Highway 4. We've entered Concord. I like to look at Concord because it's the biggest city in Contra Costa County. It's the #1 city in Contra Costa County as far as population. And notice the same trajectory. All of these markets seem to have the same pattern. Back in 2010, average home value, median home value was $325,111. And we have climbed consistently in the city of Concord above the $500,000 price point to where we are in June 2020 at a record home value of $606,000 median home value, $391 on average a square foot. The sales price to list price ratio at 102.2%, meaning that for every home that goes for sale, they typically get 2.2% more on the offer than what they had listed the property for. 9 days on the market, and if not another home came on the market, they had 1.6 months of inventory that would be exhausted in a very short period of time. Let's take a look at one last city. We're looking at June 2020, so as much relevant data that I can give you. We're looking at the city of Richmond. We're going back again to 2010. Look at Richmond in 2010. Median home value was $122,500. They were still moving pretty quick. Average day on market was 15 days on the market. And they were still getting above the list price, nearly 7% above the list price they were receiving on their property. And we see what's happened in Richmond over time. And we see the city of Richmond continues to appreciate in value to where we are today in June of 2020, representing a median home value in the city of Richmond at $482,500. Price per square foot, $384. Sales to list price ratio back nearly 6% above the list price. So those homeowners that are selling their home are enjoying the offers coming in at or above the list price. Days on market at 14 days, 2 weeks to have the home on the market. And we're seeing about 2 months of inventory in the city of Richmond. Now, I'm giving you a lot of stats and I'm not asking you to remember them, but what I am asking that you do remember is that this idea that one fender is bent, perhaps that fender representing the unemployment rate on our car as an economy, our economic vehicle, if you will. Maybe a rear quarter panel or bumper is bent when it comes to our economy, with the Dow Jones Industrial Average dropping significantly. That is not what's happening in the real estate market. In each of these cities, you do not see that reflective in those markets. And this is where I'm asking you not to, in some sense, to tell and sell anyone, but to show and share what's really happening, the truth in the real estate market. Because when we share and show the truth of what's happening in our market, it helps our clients to be able to make better decisions. It helps them make better decisions whether they're ready to sell a home or purchase a property, whether they want to transition from one home to the next. So my hope is that you take this picture and it gives you a more holistic and a place where you can intelligently share and show with your clients what's happening in our local market.